much.
Okay. So we are doing the theory part of partnership. It's a question of May, June 2020, paper 21. Only the theory I'm looking at. State how the profits and losses are shared in partnership when there is no agreement. So when there is no agreement, how do you share your profits and losses in a partnership? I need answers.
Uh, the capital account balances
No.
by their equity,
No. If there is no agreement between the partners, the profits and losses are shared equally.
split 50-50.
Okay, so no agreement, profit and losses are shared equally. If there is no agreement, no interest on drawings, no interest on capital, no salary, no commission, no bonus, no appropriation account, profits and losses will be shared equally. Are you with me?
Yes, miss.
Okay. The B part of this question, it's a Hamza and Noor question, only the theory part we are addressing over here. Two reasons why you would recommend partners to have written agreement other than stating a ratio for profit and losses. What is an agreement between partners called?
Partnership agreement.
But what is it called?
A partnership deed.
A partnership deed. Now, two reasons why you should have a written partnership deed. And the reason should not be about stating the profit or loss sharing ratio. So
To
why?
avoid future conflicts, right?
So you need a partnership deed to avoid future conflicts, or you can use better words to avoid disputes. What else you can write? To state about interest on capital, to limit the amount of drawings by the partners. You can use this to limit amount of drawings. What is drawings?
Drawings is when a owner of the business withdraws money.
When the owner of the business withdraws money. Say Harris and Mahad are partners. Both of them introduce 100,000 capital. Tomorrow morning, Mahad would say, I want to do drawings of 100,000. And if there is no partnership deed, so he can withdraw the money. He will have to pay interest on drawings. So he can withdraw the money. But then the very purpose of partnership to have more funds is not there, not existing. So one provision which is normally there in the partnership deed is that there is a limit on the amount of drawings you can do. That means you say you can withdraw 5% of the capital or 10% of the capital, not more than that. Okay, so reasons to have a partnership deed: avoiding disputes, state the provisions for interest on capital, interest on drawings, limit the amount of drawing by partners. In the absence of partnership deed, what happens?
There is no regulation, therefore,
Given.
partners do as they will.
Nothing is given. No interest on drawing, no interest on capital, no salary, commission, bonus. Profit share is equal. But there is one exception that happens when, even if there is no agreement, something is given to the partners. Do you remember that? Interest on loan. This is always an exception. You should remember this. Interest on loan. Even if there is no agreement, if my partner is giving loan to the company, it's going from year to year. Okay. So the company is going to give the partner interest and loan at 6%, even if there is no agreement, no written terms, nothing mentioned. Okay. Other than this, nothing else is given if there is no agreement. Are you with me?
Yes.
Two places where interest on loan will go.
Two places where interest on loan will go is your income statement
Hmm.
and the capital account,
Which side?
debit side.
Interest
No, sorry, credit side.
interest on loan will be other expenses over here, and on the partner's capital account, it would be on the credit side. Are you with me?
Yeah.
Okay, fine.
Yes.